Happy Friday, everybody. I'm Aaron Norris with the Norris Group, and when it comes to technology and real estate, what do you think the future holds? That and much more as we cover the biggest headlines in real estate. Don't miss the radio show and podcast this week. We've got Steve Baston with John Burns Real Estate Consulting. We talk about, has HGTV just ruined the real estate investor flip business? Is innovation outpacing regulation? What makes design and finishes trendy versus classic? And how do these companies decide what goes into stores like Home Depot and Lowe's, and much more? That you will catch on your favorite podcasting service or on the radio show out of the Inland Empire on KTIE 590 AM. The National Association of Realtors reported home prices increased 5.3% in the fourth quarter of last year, while almost two-thirds of the housing markets are now at their highest ever. In addition, early-stage mortgage delinquency decreased 0.1%, and apparently from the hurricanes that has slid down, so that's a good sign. The 10-year Treasury reached its highest level since January of 2014, climbing now above 2.9%, and mortgage rates have followed suit after jumping 10 basis points last week. The 30-year fixed rate rose 6 basis points to 4.38%, its highest level since April 2014. Home prices are up, as are the number of partnerships required for fix and flippers to take down inventory because it's just so darn competitive and prices have gone sky high. Partnerships aren't for everyone, hence why a lot of people use hard money loans, because let's be honest, that fuchsia wallpaper you think is going to sell the house super fast, your partner just doesn't like. Well, partnerships work great until things go sour or the market dips. Sorry, Mom. Might be a great way to get off the Christmas card list, so you gotta be careful. In search of cash to help alleviate the intensifying homeless crisis in California, Berkeley city officials are considering an initial coin offering to raise money since other funds are just drying up. Unlike wild fluctuations in the cryptocurrency market like Bitcoin and ICOs, which have gotten a really bad reputation, and the SEC has finally started prosecuting some of these companies that are just flat out fraud as of December, Berkeley is working with UC Berkeley's blockchain lab and the financial startup Neighborly to create something that mimics the bond market, so not quite the exciting ride that Bitcoin has been going through. Few details exist, and this company is built on the Ethereum platform, and the money the city would raise would go towards various projects, but homelessness is one of their top priorities. The president's proposed 2019 budget would give HUD a slight bump. Originally, the administration released a budget that would have cut the department's funding to $39.2 billion, and that's after cutting 18.3% of HUD's budget last year. So the new HUD budget request is now $41.24 billion, so around a 1% increase. The administration focuses on several key initiatives, including ending homelessness, so apparently there's a nationwide theme going on here. The budget requests a record $2.4 billion to support the thousands of local housing and service programs assisting those living in the nation's sheltering system and on the streets. However, they are looking to cut CDBG programs, citing that impact is just not showing measurable results. So if you work in the nonprofit space, a lot of those nonprofits really rely on those CDBG things, so it'll be really interesting to see how we make some adjustment in the year ahead. The supply of low-tier listings have been declining steadily since 2014, down a whopping 20% year over year in the 31 largest housing markets. John Burns Real Estate Consulting calls it barbell of housing demand because you've got a surge in entry level and the move-down market competing for the same space. So strong pent-up demand from millennials who are finally creating households, are looking to buy starter homes, and then you've got facing competition from move-down buyers looking to take advantage of the recent price upswing, and they're looking to downsize and tap into some of that equity. The retired population is expected to purchase 75% more homes in the next 10 years than the last 10 years, buying less expensive homes, so this is going to be really interesting to watch. The force of tech in real estate is strong. Well, in 2017, venture investors deployed over $5 billion in real estate technology, and that's more than 150 times the $33 million invested in 2010. Two of the most valuable startups in the United States, WeWork and Airbnb, have both been around about a decade, but now enjoy unicorn status with multi-billion-dollar valuations. Forbes magazine does a really good job breaking down the history of real estate technology, and it says that there's really three phases, and right now we're in number 3. But the first phase is the complementary phase, which is 1998 to 2011, where digital marketplaces focusing on software and data. So you've got companies like Zillow and LoopNet that came out of that phase. And then 2.0, the challenger phase, 2012 to about last year, talks about tech-enabled services and the space arbitrage. So Airbnb, WeWork, Redfin, a lot of use of space that's underutilized and maximizing that for a profit. So this next phase they're calling the synthesis phase. So 2017 and beyond, stuff like sensors and spatial visualization, big data, platforms to manage purchases, blockchain technology. I would love to hear what you think the next decade is going to hold because I am fascinated on real estate and technology. If you're on YouTube, please leave a comment below and don't forget to like the video and subscribe to the channel so you don't miss a beat. If you're on Facebook, please don't forget to not only like the Norris Group page, but don't forget to add us to your See First list and with notifications on. Leave your comments below the video. And if we missed something, share the story on our comment sections on either YouTube or Facebook, and we'll make sure to include it on our blog at thenorrisgroup.com/blog. Upcoming events, March 7th, we'll be on the road again doing 2018 real estate market forecast. This is the event in the Inland Empire, so if you're in the area, you won't want to miss Bruce Norris. He is on stage with Christopher Thornburg and John Husing and other speakers talking specifically about the Inland Empire, state and national forecasts for real estate and the overall economy. Always a big hit and really great content. Find out how to sign up on our website. March 14th, stay put or cash out. NorCal REIA, we're headed your way, Sacramento, so don't miss that. And then a few days later, on Saturday, we'll be teaching an all-day event, Cashing In on a Boom. We're focusing on real estate strategies that are working in today's market with special guest Property Radar. We're going to be doing a full hour-and-a-half conversation. A little bit over half of that is going to be behind the scenes on how they've really turned more into a marketing firm, especially in this market in California, some of the really cool things that they have available. And then I'm going to do a one-on-one interview with David LaPlante of Property Radar, talking about various marketing strategies and tactics from search engine optimizations, website, and direct mail. Should be really, really juicy and beefy. April 14th, stay put or cash out at the Inland Valley Association of Realtors. And finally, on the 19th of April, looking way out, Pasadena Phoebe. For more information on hard money loans, including fix and flip, buy and hold, and new construction starting at just 6.9% for a hold program, for you landlords, there's nothing better out there. Check out thenorrisgroup.com, or for more information on passive investing and trust deeds, check out tngtrustdeeds.com. We will be making some changes, as I expect in March, for us to start rolling out our loans in Florida. With that, have a fantastic weekend, and we'll see you next week.